Welcome to the Deep Dive. Today we're taking a fascinating journey into the world of Intuitive Surgical.
ISRG, yeah.
You know them, they're the pioneers of robotic-assisted surgery. And to really hit home just how big their impact is, get this. Every single minute, roughly 5 surgeries kick off somewhere around the globe using their Da Vinci system.
That's right. An incredible statistic. Intuitive Surgical, ISRG, is really a dominant force in minimally invasive care worldwide.
So our goal today is to give you, our listener, a clear and insightful understanding of this influential company.
We'll explore where they came from, how their business actually works, their position in the medical tech world, look under the hood at their finances.
Their key strategies and, well, what the future might hold for them.
Exactly.
Think about the core idea. Performing really complex surgeries through the tiniest of incisions. It sounds almost futuristic, doesn't it?
It really does, but it's the reality their Da Vinci system delivers every day.
And across so many medical fields, urology, gynecology, general surgery.
Thoracic, cardiac, the list keeps growing.
And they're not just about surgery anymore. Their ion endoluminal system is used for lung biopsies.
Right, showing they're pushing the boundaries, expanding into diagnostics too.
The sheer scale is remarkable too. Over 10,600 of their systems installed now.
In about 72 countries, yeah. Supported by a global team of more than 15,600 people.
So this isn't just about the impressive robots themselves. We're going to delve into the entire ecosystem they've built.
The training, the services, the support, it's all part of the package.
Okay, so let's rewind a bit. How did this all start? Intuitive Surgical was founded back in November 1995.
With a really ambitious goal to completely change how minimally invasive surgery was done.
What's interesting is that the seeds of this idea were sown even earlier, wasn't it? Back in the late 80s.
Yeah, at SRI International. And initially there was interest from DARPA, the Defense Advanced Research Projects Agency.
For remote battlefield surgery, if you can believe it.
It's fascinating how that early, almost science fiction concept evolved. Dr. Frederick Moll, often called the father of surgical robotics, along with his co-founders John Freund and Robert Young, saw the potential and secured that crucial venture capital.
They initially called it Intuitive Surgical Devices, I think.
That's right.
And those early steps were absolutely crucial. They performed their first surgery on a human in March 1997.
And just a couple of years later, by 1999, they were already selling the system in Europe.
Then came the big one, July 2000, FDA clearance in the U.S. for general laparoscopic surgery.
A massive breakthrough. That first-generation Da Vinci system, it was a real game changer.
How so, exactly?
Well, it allowed surgeons to operate while sitting down, looking at this magnified 3D view inside the patient.
Which really overcame the limitations of traditional open surgery and even standard keyhole or laparoscopic surgery, right?
Exactly. Better vision, more dexterity, tremor filtration. And if we connect this to the bigger picture, that FDA clearance wasn't just a regulatory okay.
It validated a whole new way of doing surgery.
Precisely. And then a really pivotal moment arrived in 2003.
A merger with Computer Motion.
Yes, the makers of the ZUS system. This effectively consolidated that early fragmented market for surgical robots.
Here's where it gets really interesting, I think. That merger basically took their main competitor off the board.
It did. And that gave Intuitive a significant runway, a huge head start, really.
To refine the Da Vinci platform, build that support network.
Before facing more widespread competition later on, it was critical.
So how did they maintain that lead? Because just having a head start isn't always enough.
That's a great question. A huge part of the answer lies in their relentless technological evolution. They didn't just sit still.
Exactly. They kept pushing. The Da Vinci S in 2006, that was about incorporating feedback from early users, improving features.
Learning from the surgeons using the tech.
Then, 2009, the Da Vinci C, that one really focused on a critical piece, surgeon training.
Right. The dual console came in then, allowing experienced surgeons to guide trainees.
Yes, and the skill simulator for practice. They understood early on how vital training was.
It's so true. You can have the best tool, but without skilled users.
Its impact is limited. The Psi tackled that head-on. Then 2014 brought the Da Vinci Xi.
And the Xi's a major step forward in terms of surgical access, wasn't it?
Yeah, much better anatomical access. It gave surgeons more reach, more flexibility.
Making complex procedures through small incisions much more feasible.
It really helped cement robotic surgery as the standard of care for many operations.
Then in 2017, the Da Vinci X arrived.
Which brought that fourth-gen tech, but at a more accessible price point.
And standardized instruments across models, too.
Yeah.
Right? A strategic move.
Definitely aimed at broadening adoption, acknowledging that high initial cost is a hurdle.
Makes sense.
And they didn't stop. 2018, the Da Vinci SP single-port surgery.
Through just one small incision, opening up new possibilities for even less invasive procedures.
Then, 2019, they expanded beyond surgery into diagnostics with the Ion system.
For lung biopsies, that's a key indicator of their long-term thinking, diversifying their offerings.
Applying that robotic know-how elsewhere. And in 2021, they stepped into data analytics with the My Intuitive app for professionals.
Collecting and utilizing data becoming more important.
And most recently, 2024, the launch of the Da Vinci 5, their most advanced platform yet.
With that new force feedback feature.
Allowing surgeons to actually feel the tissue resistance, plus other optimized efficiencies.
So this whole progression, from a single product to this multi-platform ecosystem, surgery, diagnostics, digital tools.
It's a really smart long-term strategy, reduces reliance on any one thing, taps into different market segments.
Definitely looks like risk mitigation and market expansion built in.
And strong leadership has obviously been crucial. We mentioned Dr. Fred Moll's founding vision.
But Gary Guthard's tenure as CEO from 2010 oversaw incredible growth.
Huge market cap increase, major product launches under his leadership.
He really drove strong execution and expansion. And now, looking ahead, there's a leadership transition planned.
Right. Dave Rosa is set to become CEO effective July 1st, 2025.
What's interesting about Rosa is his history with the company.
He's been there nearly 30 years, employee number 9, apparently.
Wow. Currently president, deeply involved in strategy, product development like the SP and Ion.
And global expansion, too. It really signals continuity, doesn't it?
Exactly. His deep internal experience suggests they're sticking to the strategy, the culture, that patient focus.
It points towards a potentially smooth transition. We actually have a table summarizing this whole innovation journey year by year.
Yeah, it lays out those milestones from 95 to the Da Vinci 5 in 2024.
It really underscores their consistent investment in R&D and adapting to needs.
When you see it laid out like that, it's quite a story.
From a bold idea to a clinical standard used on over 16 million patients, that's commitment.
Absolutely. Okay, so now let's shift gears and look at the nuts and bolts. How does Intuitive Surgical actually operate and make money?
Yeah, understanding their business model is really key to grasping their market position.
It's not just about selling those sophisticated robots, right?
Not at all. It's really built around creating these long-term partnerships with hospitals.
Through recurring revenue streams and that comprehensive support system.
Precisely. Their revenue comes from 3 main areas, the biggest chunk.
Instruments and accessories, or INA, usually around 60% of total revenue.
In fiscal 2024, that was, what, $5.08 billion?
Yeah, Q1 2025 was $1.37 billion, up 18% year over year. Strong growth.
And this includes their specialized end-at-wrist instruments, giving surgeons that incredible dexterity.
And other essential tools. The key thing here is many are single use.
So as procedure volume grows, this revenue grows right alongside it, the classic razor and blade model.
Exactly. The system is the razor, the instruments are the blades you keep buying.
Okay, second stream.
Systems. Selling and leasing the Da Vinci platforms, X, ESP, now the 5, and the Ion systems.
These are the big capital investments for hospitals.
Right. Systems revenue in 2024 was $1.97 billion. Q1 2025 was $523 million.
That was up 25% year over year in Q1 25. Probably a boost from the new Da Vinci 5 launch.
Very likely, yeah, capturing that initial demand.
And the third key area.
Services. This covers the maintenance contracts for the systems and their extensive training programs.
Provides a really stable, predictable, recurring revenue stream.
Absolutely. In 2024, services brought in $1.31 billion. Q1 2025 was $363 million, up nearly 16% year over year.
So what's crucial here is the dominance of that recurring revenue INA plus services.
It consistently makes up, 75% to 84% of their total revenue?
Yeah, a huge portion. That offers significant stability and predictability. Investors tend to like that.
Definitely. So it's not just about selling new robots. The real long-term value drivers are
expanding the installed base of systems and maybe even more critical, increasing the number of procedures done on those systems.
Precisely. And they use different pricing models to make this happen.
Right. There's the upfront sale. Systems cost anywhere from $1 million to $2.5 million.
Depending on the model and configuration, yeah. But they also offer leasing.
Operating leases and usage-based financing. And that seems increasingly popular.
It does. You mentioned earlier, in Q1 2025, 198 out of 367 Da Vinci placements were leases.
That really highlights how leasing helps accessibility, doesn't it? Reduces that big upfront cost.
Absolutely. It can speed up adoption, especially for hospitals with tighter budgets or in newer markets.
Then, of course, there's the per-procedure pricing for instruments and accessories, the recurring revenue engine.
And the annual service contracts for maintenance and support.
What's interesting now is this emerging subscription element.
With the surgical science simulation software on the Da Vinci 5?
Yeah, included under an annual subscription. Could that be a sign of things to come? Monetizing software more directly?
It's a really interesting point. Maybe a shift towards more software as a service, even in this hardware-heavy field.
We have a table breaking down that Q1 2025 revenue dollars, percentages, growth rates. Really shows the I&A dominance.
Very clear visualization of the model.
Now let's talk value. What do they actually bring to the table? You mentioned their Quintuple Aim.
Right. The Quintuple Aim is their strategic framework. It guides their innovation, their strategy. It's got 5 parts.
Okay, what's number 1?
First, and probably most important, better patient outcomes. Things like less surgical trauma, shorter hospital stays, faster recovery, fewer complications, less pain.
They back this up with clinical studies, like the COMPARE study you mentioned.
Yes. Demonstrating those tangible benefits is key. Second is improved patient experience. Getting people back to normal life quicker, more comfortably.
Makes sense. Third
is improved care team experience. Empowering surgeons and staff with better tools.
Like the 3D HD vision, the dexterity, tremor filtering, better ergonomics.
Exactly. Reducing fatigue during long procedures. And that force feedback on the Da Vinci 5 fits right in here, giving surgeons back that sense of touch.
Okay, 2 more aims.
Fourth is lower total cost of care per episode. It's a big one, while the upfront cost is high.
They argue long-term savings from fewer complications, shorter stays, fewer readmissions outweigh it.
That's the argument, yeah. Lowering the overall cost for that specific medical event. And fifth is expanded access to minimally invasive care.
Trying to overcome barriers through technology, training, those flexible acquisition models we talked about.
Right. So the Quintuple Aim addresses multiple stakeholders, patients, surgeons, hospitals, the whole system.
It acts like their strategic compass.
Precisely. And beyond the robots, there's the intuitive ecosystem. What does that involve?
It's much more than just the hardware. It includes really comprehensive training for surgeons and OR staff.
Essential for complex tech.
Plus 24/7 service and maintenance, and a growing suite of digital tools and analytics.
Like the My Intuitive app, Intuitive Hub.
Yeah, helping hospitals track usage, costs, outcomes, gain data-driven insights to optimize their programs.
And how does this ecosystem benefit Intuitive strategically?
Well, it creates really strong customer integration and loyalty. Hospitals get deeply embedded in this whole package.
Makes it harder to switch to a competitor. Creates stickiness.
Exactly, high switching costs. Now, who are their main customers and where are they focused geographically?
Primary customers are hospitals and surgical centers, the ones who can make that capital investment.
And the key influencers are the surgeons themselves across different specialties.
Right. Geographically, they have a direct presence in the U.S., Western Europe, parts of Asia, distributors elsewhere. Systems in over 72 countries now.
And the U.S. is still the biggest market.
By far, around 68% of revenue. Q1 2025 was $1.538 billion, over 68% of the total.
But the international markets, OUS, represent significant growth potential.
Absolutely, especially Asia. OUS revenue in Q1 2025 was $715.2 million, almost 32% of the total. Big opportunity there.
That split really shows their established U.S. base and the runway internationally. Let's touch on operations R&D first. Critical for them.
Hugely critical. They invest heavily to stay ahead. New systems, instruments, software, AI integration.
In 2024, R&D spend was $1.145 billion. Q1 2025, $0.316 billion.
And over 2,000 of their 15,600 plus employees are in R&D. That's a serious commitment.
What about manufacturing? Where do they build these things?
Key sites are in Sunnyvale, California, and Mexicali, Mexico. Mexicali produces over 90% of the Xi and Psi instruments.
And they're expanding production.
Big time. New facilities in Sunnyvale for Da Vinci and Ion, a regional HQ in Georgia, planned sites in Germany and Bulgaria, plus expanding instrument manufacturing in Mexico.
Sounds like scaling up and making the supply chain more resilient.
That seems to be the goal. Speaking of supply chain, any specific risks there?
They do rely on some sole or single-source suppliers for certain components. That's a known risk.
Always a vulnerability.
And they're actively working to optimize things, especially with global disruptions and tariffs recently.
And intellectual property must be massive for them.
Absolutely. A cornerstone of their advantage. Over 4,800 owned or issued patents, 2,200 plus applications pending globally.
Huge barrier to entry for competitors. Protects their innovation.
And finally, that strategic shift towards leasing and usage-based models again, operationally.
It increases accessibility, potentially speeds up adoption, especially in capital-constrained places.
But it also shifts some financial risk, like system utilization, back onto Intuitive.
That's the trade-off, yeah. They take on a bit more risk for potentially faster market penetration.
Okay, so we have a good handle on their history and operations. Let's zoom out now to the industry and the competition.
Right, the robotic surgery market. It's definitely dynamic, rapidly evolving.
What does the overall industry encompass?
It's the development, manufacturing, marketing of the robotic systems, instruments, accessories, and all the related services for minimally invasive surgery.
And the market size. It's substantial and growing fast.
Very substantial. Estimates for 2024 were around $11.83 billion globally. Projections suggest it could hit something like $54.66 billion by 2034.
Wow, that's a TAGR of around 16.5%.
Somewhere in that ballpark, yeah. Different sources might vary slightly, but everyone agrees. Strong, double-digit growth. Massive opportunity.
What's driving this explosive growth?
Several key trends. First, the big one. Increasing adoption of minimally invasive surgery, MIS.
Patients and doctors prefer it: less pain, faster recovery, smaller scars, fewer complications.
Exactly. And robotics is a key enabler for more complex MIS procedures that were difficult or impossible laparoscopically.
Makes sense. What else is fueling it?
Continuous tech advancements, better precision, dexterity, 3D visualization, haptic feedback is coming in, miniaturization.
And the integration of AI and data analytics seems huge now.
Absolutely. AI for pre-op planning, intra-op guidance, post-op analysis, personalized training. Intuitive's case insights on the Vinci 5 is a perfect example.
Leveraging all that surgical data to improve techniques and outcomes.
It's becoming crucial. Another trend is the shift towards Ambulatory Surgery Centers, ASCs.
Right, moving procedures out of big hospitals for cost-effectiveness, convenience.
This creates an opportunity for smaller, potentially lower-cost robotic systems suitable for ASCs. But it's a challenge for companies focused on large hospital systems.
And telesurgery, still early days.
Very early stage, mostly R&D still, but the potential for remote expertise is there.
And the regulatory environment must be a huge factor.
Absolutely critical. It's stringent. In the U.S., the FDA regulates these devices, usually clearing them for specific laparoscopic procedures.
They assess safety, effectiveness, monitor issues, and now they're grappling with AI and machine learning software.
Right, using pathways like 510K, de novo, PMA. Europe requires the CE mark. Other regions have their own bodies.
And Da Vinci 5 is FDA cleared, but wasn't CE marked as of early 2025.
Correct. These approval processes are long, resource-intensive, a real barrier to entry.
Okay, let's talk competition specifics. Where does Intuitive stand now?
They've been the longtime leader in soft tissue robotics. Huge market share. Historically, maybe 80% in their core niche.
Even broader MIS robotics market, they had over 70% value share in 2023.
Yeah, dominant. But, and this is important, the competition is definitely heating up.
Who are the main players challenging them?
Medtronic is a big one, with their Hugo RAS system. Modular, open console, positioned as potentially more cost-effective, flexible.
They submitted for FDA approval in urology recently. Potential approval later this year.
That's the expectation.
Yeah.
Then you have Johnson & Johnson with Ottava. Unique design, arms integrated into the OR table, uses their Ethicon instruments.
They got FDA IDE approval late last year. Clinical trials ongoing.
Yes, starting with general surgery. Stryker is huge in orthopedics with Mecco knee, hip, shoulder replacements. Not direct soft tissue competition, but shows robotic adoption elsewhere.
Right. Any others?
CMR Surgical, a private UK company with Versius. Modular, portable, focused on affordability. They're the second most adopted soft tissue robot globally now, focusing on the U.S.
Then Asensus Surgical.
With Senhance, digital laparoscopy, haptic feedback, eye tracking, reusable instruments, cost-effectiveness focus.
Plus emerging players from China, Japan, Korea, some with government backing, increasing regional competition.
Definitely. So while Intuitive is dominant, they're facing challenges from multiple angles.
What are Intuitive's key advantages against this rising tide?
Several big ones. That early mover advantage and huge installed base, over 10,600 systems, creates inertia.
Strong brand recognition. Da Vinci is robotic surgery to many. High physician loyalty, too.
Their comprehensive ecosystem training, service, digital tools deepens integration.
The robust IP portfolio, over 4,800 patents. Significant barrier.
Proven clinical data. Over 38,000 publications referencing their tech. Hard for newcomers to match quickly.
And continuous innovation. Da Vinci 1 through 5, plus Ion and SP.
So the differentiation relies on that quintuple aim focus. The integrated system, the training, the evidence.
Let's talk about their economic moat. How strong is it qualitatively?
It seems wide and pretty durable. Built on several factors. High switching costs are huge.
Retraining teams, changing workflows, surgeons hesitant after years on Da Vinci, creates stickiness.
Network effects, too. Large installed base attracts more users, generates more data for AI and training. Hospitals want widely used systems.
Intangible assets. That strong brand, the patents.
And the razor and blade model. System sale locks in years of high-margin consumable revenue.
But you said it's not impenetrable. Where are the cracks?
Right. Competitors are targeting weaknesses. It's a high cost, maybe suitability for ASCs, offering open consoles.
AI and data is a new battleground. Intuitive has lots of data, but others are investing heavily too.
Medtronic's Touch Surgery, Stryker's Blueprint. Leveraging data for insights is key now.
And regulation, while a barrier, lowers as competitors get approvals, like Medtronic potentially with Hugo.
So Intuitive needs to keep innovating efficiently, adapt to these pressures. We have a table summarizing these competitors too.
Yeah, it shows their systems, focus, differentiators, market status, useful snapshot.
Helps visualize the competitive landscape they're navigating.
Okay, let's pivot to their financial performance. Conceptually, what are the trends? And remember, this isn't investment advice.
Right. Just understanding the trends based on public info up to Q1 2025 and FY 2024. Historically, revenue growth has been strong and consistent.
Driven by procedure volume, installed base growth, new products like Ion and Da Vinci 5. Q1 25 was up around 19% year over year.
Something like that. FY 2024 was up around 17%. Generally expanding, but growth rates can fluctuate with launches, market maturity, hospital spending.
What about profitability? Gross margins.
Historically robust, high 60% range. Generally stable, but new product intros can temporarily lower them. And tariffs have been a significant headwind recently.
Right. 2025 guidance was lowered partly due to tariffs to 66.5%.
Yes, that's a direct impact. Operating margins have also been strong historically, reflecting profit after R&D, SG&A. Generally positive trend due to operating leverage.
Though they can fluctuate with investment cycles or external cost pressures like those tariffs.
Exactly. Net margins largely follow operating profit, influenced by things like interest income and tax rates.
And debt levels.
Historically, very conservative, very strong balance sheet, minimal or zero long-term debt, lots of financial strength and flexibility.
So what are the key financial metrics for us as observers to watch?
Number 1, worldwide Da Vinci procedure. Volume growth, paramount, drives that INA revenue. Strong, sustained growth is key.
System placements, Da Vinci, Ion, SP shows installed base expansion, future recurring revenue. Watch the mix too, DV5 versus older, sales versus lease.
Installed base growth itself, the cumulative number. More platforms mean more procedures, more service revenue.
Instruments and accessories, INA, revenue per procedure. Average consumable spend per surgery. Stability or growth is good.
Recurring revenue as a percentage of total. High and growing is favorable, shows stability.
Gross profit margin pricing power, manufacturing efficiency, watch for stability. Scrutinize contractions like the tariff impact.
Operating profit margin, overall profitability after operating costs, efficiency measure.
R&D investment, absolute dollars or percent of revenue. Shows commitment to innovation, maintaining the lead, crucial long term.
And free cash flow, FCF. Cash generated after CapEx, shows financial health, resources for reinvestment or returns.
How do they typically allocate their capital? Where do the profits go?
Primary focus. Organic growth via R&D. Consistent, significant investment there.
Capital expenditures, CapEx for facilities, manufacturing expansion in CA, GA, plan for Europe, Mexico.
Right, investing in infrastructure. That trend is increasing. Historically, no dividends earnings retained for growth.
They have done share buybacks sometimes.
Yes, used at times, including accelerated share repurchases, ASRs, as a way to return capital.
And mergers and acquisitions, not a primary strategy.
Not historically large M&A. The computer motion deal in 2003 was pivotal, but rare. More recently, they used Intuitive Ventures.
Their corporate venture capital arm, investing in early-stage, minimally invasive care companies.
Exactly. Suggests nurturing complementary external innovation rather than big acquisitions, fostering the ecosystem.
So the strategy seems focused on self-reliant, organic growth, strong balance sheet, financial resilience. Intuitive Ventures is a nuanced approach to M&A.
Right. We have a table summarizing these conceptual financial trends and influencing factors too.
Okay, let's synthesize this with a SWOT analysis. Strengths, weaknesses, opportunities, threats.
Good framework to consolidate everything. Let's start with internal strengths. What stands out?
Market leadership, dominant brand Da Vinci is robotic surgery. Innovative products, advanced tech like DV5 force feedback, Ion.
Large and growing installed base over 10,600 systems, 72 countries. Powerful recurring revenue model, 75–84% from I&A and services.
Extensive surgeon training ecosystem, creating high switching costs. Robust IP portfolio, over 4,800 patents.
Strong financial position, high cash, low no debt, strong FCF. Experienced, long-tenured management team, commitment to clinical evidence, over 38,000 publications.
That's a strong list. What about internal weaknesses?
High cost of systems and procedures, a barrier to adoption. Significant reliance on the Da Vinci platform disruption would be impactful.
Long sales cycles for capital equipment, complex hospital approvals.
Complexity of manufacturing, high R&D costs needed to stay ahead, susceptibility to margin pressure from tariffs, trade-ins.
And the steep learning curve for surgeons requires significant time investment.
True. Now, external opportunities.
Geographic expansion, underpenetrated international markets, especially Asia. Expansion into new surgical procedures and indications via R&D.
Technological advancements, AML for planning, guidance, analytics, training. Next-gen platforms, miniaturization, digital ecosystem expansion, my intuitive hub, case insights.
Growth in ambulatory surgery centers, ASCs, if they can offer suitable systems, strategic partnerships, and ventures via intuitive ventures.
And the continued overall adoption of minimally invasive surgery, MIS, as a tailwind.
Okay, finally, external threats.
Intensifying competition, Medtronic, J&J, CMR, Asensus, emerging players, China. Different features, lower prices, potentially niche targets.
Pricing pressure from that competition, economic downturns, hospital capex constraints.
Regulatory changes and hurdles, especially for AML. Impact of tariffs and geopolitical trade tensions, a major current headwind.
Reimbursement challenges, policy changes, insufficient levels. Development of alternative treatments like GLP-1 drugs impacting bariatric surgery volume.
Product liability and reputational risk. Cybersecurity risks with connected devices.
So there's a real tension between their strengths, like the installed base, and the threat of new, maybe cheaper or more specialized competitors.
Exactly. New entrants might target emerging segments like ASCs or specific procedures. Requires a multifaceted response from Intuitive.
And that weakness of high costs links directly to the opportunity in cost-sensitive areas and the threat from lower-cost rivals.
Right. They've responded with leasing, the Da Vinci X, but the core cost structure is still a challenge.
And the tariff threat directly hits the strength of those high gross margins, shows macro vulnerability.
Requires operational adjustments, maybe affects pricing. We have a SWOT matrix table summarizing all this.
Provides that concise overview. Okay, let's look ahead. Future prospects and growth drivers.
This is about their strategic initiatives, potential catalysts, long-term vision, and navigating the market.
What are their main strategic priorities for 2025 and beyond?
Full launch and global rollout of Da Vinci 5 is huge. U.S. launch, international clearances in Europe, Japan, follow-on features. Force feedback and case insights are key drivers there. Increased adoption and focused procedures. Deeper penetration in specific high-value surgeries globally. Targeted evidence, training, focus on U.S. general surgery, international non-urology.
Ion platform growth, U.S. utilization, new markets like Australia, China, improving cost, long-term goal. Convert traditional biopsies.
Da Vinci SP expansion procedure growth in the U.S. with new instruments, and OUS in Korea, Japan, Europe.
Building industrial scale, manufacturing optimization quality, capacity expansion in U.S., Germany, Bulgaria, Mexico.
Digital excellence developing my intuitive hub, leveraging DV5's power for AI like case insights. Creating a more connected, intelligent ecosystem.
And underpinning all that, the unwavering commitment to the Quintuple Aim.
Right, that's the guiding framework. What about potential catalysts that could accelerate things?
Stronger than expected Da Vinci 5 adoption, breakthroughs, or faster adoption for Ion or SP.
Successful launch of impactful AI and digital products that improve outcomes or efficiency. Successful penetration of new high-volume procedures.
Strategic value from intuitive ventures integrating novel tech. Favorable regulatory developments, positive resolution of tariff issues.
And their long-term vision. What's the big picture?
They state it as a future of care that is less invasive and profoundly better, where disease is identified early and treated quickly so that patients can get back to what matters most.
Translating that, it means continued leadership in MIS via innovation, deepening the Quintuple Aim integration, global expansion of access.
And pioneering surgical data science, leveraging data for insights on techniques, outcomes, training. Da Vinci 5's computing power and sensors are foundational for this.
What's the general vibe from analysts on their prospects?
Mixed, but generally positive long-term. Bullish themes. Market leadership, innovative tech DV5, procedure growth, recurring revenue, international potential, new indications, belief in robotic surgery's value.
Bearish or cautious themes?
High valuation concerns, growing competition, potential slowing in mature markets, ongoing margin pressure from tariffs, new product costs, economy, specific worries like bariatric volume decline, China competition.
So overall consensus acknowledges their strong position, but sees a more challenging landscape now. Positive long-term, but watchful of near-term headwinds.
That seems fair. Successful execution of those strategic initiatives, DV5, Ion SP, digital AI, will be critical.
And managing the complexity and risks of international expansion regulation, reimbursement, geopolitics.
Okay, for a balanced view, let's explicitly cover the key risks and how they're mitigating them.
Crucial perspective. Risks span operations, finance, tech, regulation, geopolitics, market.
Specific ones include increased competition,
Economic conditions impacting hospital spending. Tariffs and trade policies, that big current headwind.
regulatory hurdles and delays, product development risks, market acceptance, potential cannibalization,
Supply chain disruptions, reliance on key suppliers, IP litigation risks.
reimbursement policy changes, cybersecurity risks, product liability and safety, and the impact of alternative medical treatments like those GLP-1s.
So how are they mitigating these for competition?
Continuous innovation, DV5, Ion, SP, the integrated ecosystem, strong clinical data, robust IP,
Managing tariff trade impacts.
optimizing production costs, rebalancing product flows, assessing pricing, evolving the supply chain, diversifying manufacturing, focus on supply continuity,
Addressing economic conditioned hospital spending.
flexible acquisition models, leasing, emphasizing total cost of care benefits,
Navigating regulation.
strong regulatory teams, proactive engagement, robust quality systems, ISO 13485 MDSAP, big investment in clinical studies.
Mitigating supply chain risks.
Expanding on manufacturing, new facilities for diversification, supplier codes and assessments.
Ensuring product safety, managing liability.
Rigorous quality management, regulatory adherence, comprehensive training, patient safety focus, post-market surveillance, and addressing broader ESG risks.
Comprehensive ESG program. Board oversight. Focus on product safety, ethical AI, access to care, environmental management, ethical supply chain. Did a global double materiality assessment in 2024.
Sounds like a proactive, multifaceted approach to a complex, evolving risk landscape.
It has to be. They are leveraging foundational strengths, innovation, ecosystem, financial resilience. The Quintuple Aim itself is a risk mitigation framework. Formalizing ESG shows that proactive stance on non-financial risks too.
So as we wrap up this deep dive, what are the essential takeaways on Intuitive Surgical?
Well, in summary, they're the clear pioneer and leader in robotic surgery, built on Da Vinci and now Ion, powered by that strong recurring revenue model.
Their value proposition, rooted in the Quintuple Aim, and their economic moat from the ecosystem and switching costs have been key.
But they face real challenges now, more competition, macroeconomic pressures.
From an investor's viewpoint, you weigh the leadership, innovation, recurring revenue, strong financials against that evolving competition and margin pressure.
Exactly. Future prospects hinge on DV5, INSP growth, digital AI, and navigating global expansion complexities.
So, key takeaways for you, our listener. Dominant market leadership built on innovation and ecosystem. Recurring revenue provides stability. Quintuple Aim is the strategic guide. Increasing competition and external factors like tariffs are real risks. Continued innovation, digital AI, and smart navigation are crucial.
Precisely. Our goal here was to give you a comprehensive, balanced educational overview for a deeper understanding of Intuitive Surgical, its business, and its environment.
And as always, remember, this deep dive is for informational purposes only. It is not investment advice.
Please do your own thorough research and consult with a qualified financial advisor before making any investment decisions.
That concludes our deep dive into Intuitive Surgical.